Ladies and gentlemen, welcome back to another exciting episode of the Breaking Bitcoin Market Update brought to you by KrakenCryptocurrency.com. Hopefully everybody is doing absolutely fantastic today. Of course, my name is Justin Wise, lead analyst and senior mentor at Kraken Cryptocurrency. So we've got a great day. Today is July 7th, 2023, foul year of our Lord. Today, we're going to break down the markets, look at what we're anticipating as prices are consolidating. What we've got overall in the macro environment today is the ADP report came out yesterday. This is a metric that many in the United States use to gauge the heat of the job market, and the job market is obviously a key indicator or a key KPI, key performance indicator of how the economy is doing. And right now, overall, the macro narrative, of course, is the Federal Reserve, the Federal Reserve and its control over interest rates. This is all anybody has been talking about pretty much for the entire last year. And the ADP report coming out was very positive, but it was another example of good news is bad news for the economy, because the ADP report showed that private companies had hired twice as many employees over that section of time that was measured relative to the previous time that was measured. And that's very good. Like, that's good for the economy, that we're getting lots of jobs, hiring, that employers are being proactive in their hiring choices, and that there are jobs available in the economy. But the problem with inflation from the Fed's perspective is that a hot job market contributes to inflation. So the reason that the stock market took a downturn, and cryptocurrency has even taken a downturn over the last couple of days, and certainly since yesterday, since that news hit, is because the anticipation from investors is that the Fed will raise interest rates, and we have an anticipated interest rate hike again coming up this month. And of course, that doesn't bode well for the equity markets, for the cryptocurrency markets, which have been a little bit detethered somewhat from the equity markets, but are starting to correlate a little bit back together on their coefficients. So anyways, however, we do have the government report coming out today. It might have already dropped. I didn't get a chance to look before I started preparing for the stream. And that is considered to be a little bit more precise or accurate relative to the ADP report that came out yesterday. So we're going to see what effect we have out from the market. Currently, I'm flat on my day trading positions. I don't have a position open. I've been watching the market for a little bit. Of course, we had kind of an early morning rally following some consolidation after yesterday's downsell. And I'm just waiting for the market to pick a dominant direction before I enter into a position, although I am thinking short. Of course, we're going to start off today with our long-term analysis. We're going to look at the weekly chart, the daily chart, and give you guys an idea of what I'm looking at and what I'm anticipating on the higher time frames moving forward. As always, if you have any questions or chart requests, even sarcastic remarks, drop them in the chat. I will be happy to answer your questions or look at chart requests as time is available. There is a free guide, The 5 Mistakes Holding You Back from Profitable Trading. I highly recommend if you're interested in improving your trading ability. It's completely free. The link is down in the description. Go grab that guide if you haven't already. And if you'd like to copy trade me on Fairdesk, they are offering a nice sign-up bonus. You can copy my trades, profit when I profit, lose when I lose. The link is down in the description for that as well. So without further ado, let's get started with today's breakdown. Sorry, I let that go on just a little too long. I didn't mean to let it go on that long, but hey, these things happen. All right, so of course we do have the day trading setup right here, but we are going to flip over again. As I said, I'm just kind of, as we can see, this is exactly what I was talking about previously. Pretty much over the evening of the 6th, we just had some range bound consolidation toward the bottom of our current daily range, followed by this nice little pop that we got starting at around 5 o'clock in the morning, my time. So a nice advance from Bitcoin of about 1%. So about 30,000 up to about 30,300. Now we're just consolidating sideways. We are, of course, currently kind of looking for a reversal to the downside here. That's kind of my primary trade setup. But again, I'm just going to be patient and see if we do get some momentum breakout follow through on this, in which case I will be going long. So again, just kind of getting back into my day trading strategies here, and we're just going to be taking things nice and easy. No need to rush anything. So for your viewing pleasure, let's start off with our higher time frame analysis. And of course, we are going to be starting with Bitcoin as we are wont to do. Let's just get that looking a little bit better right there. Okay, excellent. Shout outs to Cryptonomics, Profit Bear, and of course, Gravy, Grits, and Green, three of my favorite people in the world. Hopefully you guys are doing very, very good today. First, let's get the indicators off of here, and let's also hide the drawings, and we can just kind of see so far the bigger picture. All right, so 2023 has been a fantastic year for cryptocurrency. We've had an advance of roughly 100% from trough to peak here. And it's just been a good year. We've had some great weekly advancement candles. And this is also a reminder of general investment strategy. If you are in Bitcoin for the long haul, trying to time the market with your portfolio is often a foolhardy thing. What we do with trading is very, very different from investing. I am a long-term and firm believer in Bitcoin. I think it is a transformative technology that will make the world a better place and is the best technology. And as I was saying in our private mentoring session for our premium members just a couple of days ago, when you understand that, my two investment criteria are that I understand something and that I fundamentally believe in it. I will not invest in something if I do not, if those two criterias are not met. And that has saved me from many knee-jerk reactions, many poor investments that would have been made in the cryptocurrency markets. 98% of cryptocurrencies do not have another run following their first big run. Most cryptocurrencies will have a run. I don't want to say most, but a good majority of the ones you'll hear about and will chart will, of course, have at some point, generally early in their launch, a pretty sizable run and early opportunities, great profit opportunities for early investors or coin flippers. But 98% of cryptos after that first big run do not then go on to ever really run again, do not ever trade to a higher price, leaving many, many, many bag holders. So you have to be very cautious, very careful with your choices in what you choose to put your money into with regards to cryptocurrency. And if you just follow those two tenets, I think you're going to save yourself a lot of headache and trouble. Really study these things, really understand the blockchain trilemma, issues with the current central banking system. Those are kind of the prerequisite knowledge that I had that allowed me to take the orange pill, the Bitcoin pill, if you will. And that kind of, anyways, I've dallied a little bit too long on that. So anyways, but the point is, this is just common stock knowledge investment that the majority of gains made, for example, from the S&P 500. So let's say you're holding just an index fund, whether that's VOO or VTI, whatever it might be. Or one of the spider S&Ps, simply being out of the market for several key weeks would have made you miss out on a large majority of the gains. So if you are invested in Bitcoin, you need to invest in Bitcoin. You need to dollar cost average. You need to manage your portfolio, manage your risk, and not try to trade in and out of the market too frequently. So again, very different from what we're doing with a day trading or a swing trading type activity and mentality. So very, very different. And as we can see, the reason I point that out is because the majority of gains came from just 1, 2, 3 weeks. 3 weeks in the cryptocurrency markets. If you would have been flat or trying to trade in and out during these 3 weeks, you would have missed out on all these gains. This is a 22% weekly candle. This is a 27% weekly candle. This is a 16% weekly candle. So just simply being in the market, again, age-old kind of adage of the markets would be time in the market versus timing the market, all right? Especially when it comes to investment. Let's see here. Gravy, Grits, and Greens says, we don't counter, he says, you know me, I do not counter trade the higher time frame trend. So I'm hoping for a deeper pullback to add to long-term longs. That is absolutely fantastic. Buying the dip, strategically has been a good dollar cost averaging entry strategy for Bitcoin. Of course, it sucks when you're doing that during a bear market because the dip just keeps on dipping. But again, what have we noticed over the last 10 years of Bitcoin's history in particular? It is very cyclical, and pretty much regardless at any price you bought, you were eventually rewarded. And why? Why is that true of Bitcoin and not other cryptocurrencies? Because Bitcoin is a transformative technology that has been widely adopted. It's not going anywhere. Gravy, Grits, and Green says, wait, so you mean my Shiba coins aren't going to break all-time highs this year? Hey, listen, there are there's hundreds of thousands of cryptocurrencies out there. If you count all the sidechain coins, all the ERC20 tokens, all the coins listed on all the different blockchains, all over the place. So 2% is a small percentage, but it is a small percentage of a large number is a large number. So there is going to be a good number, a great number of coins that are going to moon, that are going to do fantastic. And obviously the key of any blockchain analyst or investment analyst is attempting to identify what differentiates the ones that are going to do well over the ones that are not. And they're pretty much the same metrics: adoption, technology, usability, marketing, staff, all of the things that you would want to see for investing in any traditional asset. Is the company well managed? Are they making a profit? Do they have some are they disruptive? Do they have do they have loyal customers? Whatever you might be looking at, for investing in a company like Starbucks, for example. I invest in Starbucks. Why? Because people love Starbucks, right? They're pinned. Anyways, so it's been a good year for Bitcoin so far, and overall for the cryptocurrency markets. Bitcoin has been, of course, leading the pace over Ethereum. This is something I talk about a lot. All you need to do, people wonder, I get this question so many times, and I've talked about this so many times. Should I have Bitcoin? Should I have Ethereum? Is Ethereum better to hold than Bitcoin? Bitcoin's better to hold than Ethereum. Bitcoin has almost consistently overperformed Ethereum, and all you need to do to verify that is look at the Ethereum Bitcoin chart. If the Ethereum Bitcoin chart is moving up, then it is more profitable in dollar terms to hold Ethereum over Bitcoin. Even in Bitcoin terms, if you're trading back into Bitcoin, you're going to get more Bitcoin for your Ethereum when you trade back into Bitcoin. We also get more just if you just going from a stable coin or USD into Ethereum, you will make more money in USD terms holding Ethereum during those periods. But but since 2022, or really since 2021, Ethereum Bitcoin has just been range bound and has not been able to definitively outperform Bitcoin on any significant metric, and certainly not during the bear market. So there are these swing trades. Ethereum presents swing trades to trade in and out of Bitcoin into Ethereum. Ethereum presents opportunities to swing trade. So you can see here, there are these punctuated moments of, 1 to 2 months where it is more profitable to hold Ethereum. But again, that is getting into timing the market. And while there's nothing wrong with doing that, if we're talking about doing that with your portfolio, it's just a little bit risky. But again, this is just got a simple strategy to gain some alpha over your traditional Bitcoin holdings if you are so inclined and if you want to take that risk. But I mean, in the long run so far, Ethereum has not been able to consistently outperform Bitcoin on any metric for the last 2 years. So for that reason, when people ask me, should I have Bitcoin or Ethereum in my portfolio? Well, of course, Bitcoin, right? And maybe not 50-50. Cryptonomics says Shiba and Pepe should be good, as well as Dogecoin. Yeah, I mean, listen, you got to follow the narratives, right? But I just want to put the kind of the arguments case out there, right? That the argument is, everybody thinks that and I even, I purchased Big Eyes based on this, that meme coins are going to have another run, but and I don't want to be the negative Nancy, but are they? Right? Are meme coins going to have another run? Is the narrative going to flip back to meme coin? I don't know. We'll see. I mean, I have SHIB, I have Doge, so I hope so. I like that. He says, I make a solid living trading the majors and I'm almost 40, so don't got to take those risks anymore. It's a good feeling to have, right? Being a good trader is a good problem to have. Okay. So back to Bitcoin. Sorry. There we go. All right, back to Bitcoin. Weekly time frame. Again, we had a really nice advance 2 weeks ago. Really nice advance, 16% candle. Now we've just simply consolidated. I don't want you guys to rule out a bearish last half of the year. Okay. We've gone over this before, the whole sell in May and walk away thing. I've done that analysis, and even though I didn't recommend that based on the statistics that I was able to gather, the probabilities, it is statistically not profitable to sell in May and walk away for the exact reason that I went over. If you're simply out of the market during key weeks with your portfolio, you're going to miss out on the large majority of gains. So with your portfolio, don't be timing the market. With our swing trades, the current situation in Bitcoin does, I think, present a very easy opportunity, right? We are range bound, and it's really just as simple as I don't want people to rule out a bearish second half of the year. So I think if we break to 29, excuse me, remember, we previously had this head and shoulders target. We almost hit that measured move, right? We went down to 24.7. We were looking for 23.4. We did get this little breakdown, but it wasn't significant. So this head and shoulders pattern has been invalidated. We've completely swept that head and shoulders pattern. And now we're just consolidating in a range. I think this is very simple, all right? If we break 29, we're probably going to come down here to 27. And if we break 31, we're probably going up to 36. Okay. Momentum follows momentum. Now, what is the bearish case for this? Well, the bearish case for this is that we know based on our cycle analysis, and I've gone over this so many times, but just very, very quickly. Ever since 2016, Bitcoin has shown a very cyclical nature with its market price, where we will have a large rally, then a bear market, followed by some consolidation, and then a final capitulation dump, followed by a very explosive rally. And that explosive rally is followed by a long and painful sell-off, usually through, again, this one started in June. We started rallying in January. Okay, so again, very similar to what's going on in 2023. We started rallying in January in 2023. And that rally back in 2019 ran all the way to June, where we kind of did a double top almost, and then we sold off until the next year. So pretty much from June, July of 2019 to March of 2020, we sold off. We had a capitulation event in 2020, and that was so notice that we did not go lower than the bear market low. So once that bottom is put in and we rally, we go low, but we don't go lower than the low. And then it's full send off to the bull market again. And this is right in line with Bitcoin's halving cycle. There are very many reasons for this. But again, ever since 2016, Bitcoin has shown the cyclical nature. So this is our overall investment thesis moving forward for 2024, 2025. So here we are. We find ourselves in July again. Is this going to be the top of the market? If it is, and this is kind of our current thesis, July would be the top of the market or very close to. Again, we could always rally up into August and in September. It's fine. Just because it happened in June or July of that year doesn't mean it's going to happen that way this year. Anyways, that thesis would predict that we are at some point going to sell off and have a long and pronounced drawn out kind of mini bear. Where we will not go lower than 15,500, but we will come down and tease it, 20,000, maybe 18,000, something like that. And then following that, it's full send into the bull market. So I think accumulating for the long-term investor, again, utilizing any sell-offs here, if we do enter into a kind of pronounced bearish trend for the rest of the year or even to the beginning of 2024, that's totally fine. I would view that as opportunities to actually accumulate a good position at these good prices, and then just be prepared for the full send in 2024, 2025. Of course, again, I want to put out the shorter term bullish case. We can, of course, continue to rally higher, and we always have to be open to breaks of this cycle one way or the other. So, and knowing the past allows you to understand the present and anticipate the future. So that's what we are attempting to do here. Great point. Pointing out that these pullbacks historically average almost 40%. Just a heads up for everybody. So if this was the top of the market, let's say the top of the market was here, a 40% pullback would put us back down at 18.8. So again, 18,000, 20,000. I think those are very reasonable and logical. None of that, nothing of that. Excuse me. I think it seems wrong to me. Okay. All right, so that's where we're at on the weekly. Again, on the daily, I think this is relatively simple for the swing traders out there. I think I think we have opportunities now for momentum. Volatility, we've seen all of these scam wicks on the daily time frame. That's generally indicative that a large move is happening. This does look like distribution to me, but I don't want to stand in the way of momentum. So I'm looking at this and I am logically thinking we dump from here. However, again, momentum begets momentum. So anyways, daily closures above 31,000, I think, should be longed with prejudice. And daily closures below 29, I think, should be shorted with prejudice. So again, very simple, not very complicated. That is the overall setup. I wouldn't diddle in the middle here too much. There are opportunities, of course, here for range trading, but I wouldn't be doing that on the daily. I would be doing that on the hourly, maybe the 4 hour, but not on the daily time frame. All right, so with that out of the way, let's check in with, I need to make a modification here, excuse me. And we are going to be taking these off and dumping and modifying. So we are going to be pulling up the whole 60. Okay, and we're even going to save this template, which I like the idea of. Okay, there we go. Sorry. Just wanted to make some modifications. We're going to be taking it back a little bit old school here. Let's actually save that because I don't like the idea of bottom feeder being on all the time. Okay. All right. Looking in at pathways to profit, again, it is signaling and hinting at this potential breakdown as well. We have Minx crossing below the 0 line right here, and that is happening at the same time when the daily candle is also crossing below the Hall 60 right here. Now, again, we are getting an up candle on the daily, so again, maybe positive news on that jobs report, which I actually don't have information on right now. Let me see if there's anything in the $18 minutes ago, Arthur Hayes said Bitcoin will be the chosen AI currency. All right, let's see here. Ordinals. Okay, nope, I don't see anything on that, at least in the BTC USDT screener, but that's funny. 18.8 is where you close your shorts last fall. So again, we have kind of everything in the making here for a momentum short trade. Let's just for funsies, if we were to get that signal today, we would be looking at invalidation at 31,747 and targets at 29.4, 28.4, and 27.5. All right. So yeah, I think breaks of 29 down to 27. That's a 6% movement to the downside, a retrace. That would be interesting to see because that would be essentially a break of the current consolidation range to the downside and a retest of the previous consolidation range at the bottom end of the range. That would be with the bigger range, this bigger range that we kind of had right here. So interesting price action. And it will, of course, notice that since we are kind of downturned here, it is going to take an actual daily closure above 31,000, 31.3 even. If we were to be getting a long signal from pathways to profit. So that's all fine. That's the daily time frame. Currently flat right now. Range trading opportunities if we get down to the lower time frames, the meso time frames, excuse me. And again, nice up candle on the daily. So with that out of the way, let's kick some music on. And of course, you guys are gonna have to tell me if you can hear it, if it needs to be turned up or turned down, because I do not have my. I can't hear it. Otherwise, I can't focus. I know that there's some streamers who they'll listen to music, they got their headphones on and everything, and I just can't do that. I can't focus on what I'm gonna say next. It's just whatever. And let's look for some intraday opportunities. Okay, so again, we want to keep in mind. We want to keep in mind the situation on the daily range, and we drove back down to the bottom of the range and currently turning up from the range. So from the daily perspective, what is more likely to happen when price is in a range? You assume that price will stay in a range. So range trading strategy would be to buy low, sell high, sell low, short high, cover low. So this would essentially be insisting that we look for long opportunities. But before we do that, let's look at the 4 hour time frame, and we'll just kind of go down in our analysis here. All right, so again, 4 hour time frame, range bound opportunities here. I think this is a little bit too much of a meso time frame, too high of a time frame to identify these opportunities right here. 4 hour, we're using the Bollinger Bands. Again, price traded down below the lower boundary of the Bollinger Band and closed back up inside. So that's a buy signal. Now we've come up to the medium band of the Bollinger Band, which is our first level of resistance. So pullback here, followed by continuation to the upside, or pullback followed by breakdown of the range if we're going to get resolution quick, fast, and in a hurry. Cryptonomics concurs. BTC above 31,300 long. Anything below is short. Okay, I see what you're saying. Hourly. Again, a lot of volatility here in the hourly. Again, we rallied up to 31.5 and chunked all the way down to 29.7. Now we're kind of in the middle at 34.16. The hourly is looking a bit like a short. The 4 hour is looking a bit like a short. The 30 minute is looking a bit like a short. So I'm thinking short it might be. Yeah, double wick here. Swing failure pattern. But also I'm just noticing as well kind of the big buys here. Good thing I didn't go for that long, right? Or excuse me, that short right there. That would have been kind of crappy. All right. Let's see if we can't get our opportunity. So price has come down. And so we're going to look somewhere around maybe 30,400, or if this fails, we're going to take this breakdown right here. All right, so if price rallies up to the 30,400, we will go short. If price comes down here to these lows again, we will also short. And why? 4 hours hitting resistance. The hourly is hitting resistance. 30 minute has reached resistance and is about to give us a sell signal. The 15 minute time frame has hit resistance and is consolidating. The 5 minute is sideways with tightening volatility, letting us know that a move's coming up. And the hourly. Again, we're just using the hourly to try to get the best possible price. So we had a nice little price pop there. And so we're going to, again, fade the movement up at 30,400 or take the breakdown at roughly 30,333, give or take. So until then, we'll just wait and be patient.
She's got a ticket to my heart. Ticket to my heart. Uno, dos, tres,
What I really want to do over the next few months is I would like to get the different LTF strats that have been successful for me, and then we can run them. We can run them like, you know, a month at a time to see how good they are. Hey, quarter crawler. Excuse me. Let's see here. Back to higher time frame for a second. I think it's range traders delight until BBWP gets a bit lower at least. Yeah, let's go look at. Okay, so we did save this setup, I do believe. Yes, so we should be good there. Let's just find out. Yes, so we should be good. Yeah, on the daily time frame, I mean, we had this big explosion of volatility and this spike in volatility here. And volatility has kind of flatlined on the daily, but it's not, you know, again, we can literally see the Bollinger Band width here. I'd really like these to get, I mean, tightened up. You don't always get that. Low here, and then a pretty big move. All right, kind of coming up on a, let's see here. Anything up here, we can look to take some profits here. Basically any trade that we get here, we're going to be sliding down here. There we go. Psych. Psych. Oh, you thought we were going to respect the trend line? Get out of here. All right, yeah. So nice lower time frame advance here so far. No divergence so far. That's another thing we would be watching for quite closely. Divergence is always fantastic with Bitcoin. It might have been a good move. That would have been potentially a good entry there. We'll see how price plays out. But that was, I like the idea there. I like essentially where we were trying to go. Yeah, S&P rallying pretty hard on the daily, so I think that we probably got some good jobs report. Some good jobs report stats. BTC, USDT, Binance. Give me one sec, guys. Log in off screen. Why did you do that? Okay, here we go. Bum, bum, bum. That's so weird. Why are we not getting? Here we go. It's like they changed it or something. All right, so we're going to be watching open interest. Funding just exploded. So funding is positive, meaning longs are getting paid, or excuse me, longs are paying shorts. Longs are paying shorts. CVD overall on the decline. That's crazy that funding just spiked so high. Crazy like a fox. Let's see here. NXU doing something. So many people still waiting on the recession that's not coming, Cybernetic says. Been long since December. It's all about fiscal flows. Boris, thank you. Yeah, non-farm payrolls came below expectations, 209,000, where 225,000 was expected. So I guess this implies the Fed will be less hawkish with rates. That is the implication, yes. So the ADP employment report came out yesterday stating that we had twice as many employments in the private sector, but the governmental report is considered much more good. And yesterday, because the ADP was high, that's contributed to a little bit of the investor fear. Because if jobs are, if the rate of employment is rising, that indicates a heating up job market, which contributes to inflation. So many people were duped into the failing dollar and inflation they sold, and now markets are rallying. Yeah, people got afraid and put their money on the sidelines. I mean, it's a story as old as time. Some tightening volatility. I just want to see which way we expand here before I take a move. Again, up around 34. I'll look for a position, or the momentum short. Up high, the 30,288. Oh, looks like the break. Yeah, it looks like the break. We shall see. Yeah. Nice breakdown here. Yeah, this is pretty much, we're actually at a slightly better price than the initial sell signal. And we have tested this this support many times. 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5. Or maybe this, does this count? Maybe 1? I don't really think so. 1, 2, 3, 4. As opposed to 1, 2. Maybe. Yeah, it just depends on how you want to count it, I guess. Let's see here. Cybernetic says, isn't it crazy how none of these so-called experts ever take account of the interest channel? During the Volcker era, we had 1/6 the debt to GDP we have now. A rate policy tool is ineffective and actually is the cause of the economy remaining hot despite rate hikes. Could you expound on that a little bit more for me, please? Specifically, I guess my question is, what in the interest channel should experts be taking into account? What is the relationship between debt to GDP with regards to inflation? And what is a better tool as opposed to rate hikes or rate cuts that the Fed could wield to combat the monster of inflation? Big rally from the S&P futures. Not really yet overheated. No, I don't think so. Okay. Thank you so much for the swift reply, my friend. He says, so because we have so much national debt, well, I agree with that. Yes, we have a lot of national debt. Yes. When the Fed raises rates, this causes the net transfers from public to private through the interest channel to explode. Okay, hold on. So raising interest rates, increasing the cost of borrowing, causes net transfers from public to private. Can you expound on the public to private and interest channel for me as well? Are you saying of wealth, of dollars? This is stuff that I know, for example, what's his name? Eurodollar University. His name is Jeff Snyder. Yeah, Jeff Snyder. I used to watch Jeff Snyder a lot, but this is certainly not my area of expertise. When I lend to the government, I receive an interest payment. That is new money that didn't exist before. That is money printing. Yeah, I think Jeff Snyder would call it a swap. But I see what you're saying. I mean, yes, in general, I agree with what you're saying. Okay, sorry. So let me go back to kind of the beginning on what we were talking about here. You're saying here we go. Because we have so much national debt, when the Fed raises rates, this causes the net transfers from public to private through the interest channel to explode. I still don't understand that part. Like I've just never heard that term before, interest channel. I'm not sure what that means. And again, this idea of what is being transferred from public to private. USD, debt, wealth. Hopefully you can help me understand. Which is used to tamp down the borrow channel, private credit. Okay. So because we have so much national debt, therefore this rate policy tool, which is used to tamp down the borrow channel. Right. So higher rates reduces borrowing activity because it's more expensive. Yes. Okay. Interest rate policy is the only tool the Fed has. If all you have is a hammer, every problem must look like a nail. Yeah, Alex says that all the time. When I lend to the government, I receive an interest payment. When I lend to the government. Well, not necessarily. I wouldn't say that necessarily all. It's not. I don't think it's the case that every dollar of interest paid on T-bills, government bonds, is money printing, because the Federal Reserve is the most profitable bank in the world, and yeah, we're essentially some of that is recycled. Oh, what are we doing here? So just sideways consolidation here on the hourly. Basically, we've seen this pattern of dip, dip. I just don't want to get the thing I'm trying to avoid here, and the reason I'm not jumping into a position just yet is because I've seen this kind of behavior before. We've established this level of support here. I don't really want to anticipate the breakdown. I want to enter into momentum on the breakdown. But what can often happen is when we're establishing a level of support like this, and here's the thing, it's psychological. You're seeing lower highs and lower highs. We're not seeing lower lows, right? We're not seeing lower lows. We're seeing lower highs and equal lows. And what can often happen is we get a springboard, right? And while I think that the direction of the day will probably be down, Why would Japan and China want to own these coupons? Well, I mean, I think a reason. So first off, I'm not disagreeing with anything you're saying. It seems like you know more about this than I do. But I just want to ask questions about some of your fundamental assertions here. I mean, we're all here in the Bitcoin world, so we're all on the same page here. You know, bigger picture. Let's not forget about that. There's some big problems with the system, but yeah. So the Federal Reserve turns a profit on its activities. It's the most profitable bank in the world. And that profit, the first thing I know this for a fact, the first thing that profit is used for is that it is used to pay out the Fed's required 5% dividend to its shareholders, which are the big banks of the United States, JP Morgan Chase, et cetera, et cetera. So I know that for a fact, that the first thing that's done with the profit from the Federal Reserve Bank is the 5% interest, the 5% dividend, one of the best investments in the world, is paid out to its shareholders. Then I believe, I know what I said for a fact. What I believe then happens is sequentially interest is paid out and then any leftover profit is returned to the treasury. I know that last part to be true, and I know the first part to be true. I'm unclear about the middle part. I'm not sure if the profits are used to pay the interest. It seems like logically that it would. Like logically, why would you print money? You can either have deposits in a bank reserves, or you can purchase government securities, like a savings account that pays interest. And also, I mean, you can have currency, right? You don't have to have the bank deposits, but that's technically out of this. No, it's not out of the system. This is kind of the chart that we want. Rising open interest as price is falling, while cumulative volume delta is definitely tilted to the downside. Cumulative volume delta has been tilted to the downside ever since up here with open interest. Yeah, a lot of positions closing out, and I think positions starting to clamor for entry here. I mean, this is looking like a descending triangle all day, isn't it, boys? Okay. So yeah, we just got short. Wow, that was great. Like moments before the breakdown. That was great. Let's see here. $32.08, I think. That was great patience. You guys saw that, right? Like I sat here for almost 20 minutes and didn't take a position, and then took a position, and a split second later, that was awesome. That was great. So we're just small targets. We're just day trading. We're just scalping. We're just looking for small wins. This is for the copy traders right now. So when I am day trading, which is for my private account and for the copy traders, I'm just looking for small wins, guys. I'm just looking for small wins. They add up over time. They allow me to take larger positions. Nothing crazy here. Nothing crazy here. So yeah, breakdown of that range. And we're going to take pretty early profits. We're not gambling on the big move now. Yes, the Fed turns over all profits. That doesn't negate what I'm saying. The government pays an interest to its creditors. The Fed is merely the government's bank or uses to settle all payments. Yes, the Fed doesn't. Yeah, I'm sorry. I'm trying. I guess I'm sorry. Let me go up. What was your initial assertion here? I guess this is. Okay. So what? Yeah. Sorry. Let me get back to your fundamental principle. What you're saying is that the recession's not coming. You think that things are very bullish, and the reason that you are very bullish is you're looking at the macro. You're looking at the fiscal flows. You're looking at the interest channel. Okay. So what? Yes. Thank you, Zyber, for correcting me on that. Yes, that is exactly what Snyder said with regards to. He said that QE is not money printing, it's a swap. Yes, that's exactly what Jeff Snyder was saying. I was listening to his debate with Lynn Alden on, I think it was Blockworks, and he said exactly that. Interest, Cryptonomics says, interest was supplied at par while the buy was under par at discount, though. It's like you buying 25-cent lemonade from me that cost me 0 cents. I turn around and give you 10 cents. I profit 15 cents. Didn't have to print anything and still came out on top. Now I'm even more confused. I agree ultimately that the government can't borrow in its own money. That's like lending Chuck E. Cheese tokens. Chuck E. Cheese. The increase on the money supply comes through deficit spending to cover the interest payment. The increase of the money supply comes through deficit spending. Right. So because the government is running a deficit, meaning that the income that it receives is less than the debt that it owes, they have to, what I've always heard and what I believe is true is that they have to print the difference. And that is essentially inflation, right? Essentially inflation. The Fed wants 2.2% inflation. They say that real inflation is closer to like 7%. Some people say like 16%. Depending on kind of what goods you're looking at here. But at the end of the day, so yeah, just first principles. Getting your assertion is that, well, you are bullish. That's not an assertion. That's just your position. You're bullish, and the reason you're bullish is because of the macro. You think the macro is bullish, and that we are being fed. Most people are being fed a lie that there's a recession coming, that things are going to be bad. You think that things are actually really bullish. So let me ask you this then: where do you see the economy in, like, let's say 2 years, right? So where are 5 years? How does this situation resolve itself? Do you believe that the current system is sustainable? And will we not just have this problem again in like 7 years? Because it's been this never-ending miasma of financial crisis for the last 2 decades. Well, the last decade and a half, let's say. Yeah, since 2007. It's now 2023, and it's just been kicking the can. So ultimately, I guess my question is, do you believe that, yes, we've had amazing, beautiful, fantastic, life-changing rallies in between there, all of Bitcoin's history in between there. But does the game of musical chairs have to stop at some point? Is all of this just creating a larger and larger and larger problem that will eventually need to be dealt with? Or is this just something that we can continue to sweep under the rug? I think that is the long term. That's the long view question. That's the question I'm interested in. That's why I'm Team Bitcoin. Dun, 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 dun. Okay. So yeah. I mean, that was fantastic, guys. I mean, we got short here, and literally split seconds later, we got this nice, beautiful movement down. Brief rally back up. Not scared. Never be scared in trading. We're just that was great. I love it when that happens. That, you know, I'm not gonna lie, that happens to me a lot, where I will just sit and wait, and then finally take a position, and then it moves very quickly after I take a position. Obviously, when things are going good, it's moving in my favor. Although I have been known to buy and bloop. Yeah, these things happen. In those situations, I mean, it just depends on what kind of risk management system you're utilizing. I think cryptocurrency is very forgiving. You know, I would say 9 out of 10 times, if you're just patient and leave your position open, it'll come back down to your entry price. Boris says, after the stream, can I check the concierge spot? For some reason, I can't access the premium. Yeah, of course, man. I can actually probably take a gandy at that right now. Give me a second. Let's see what's going on here. Boom. Okay, so I see why. So I see that I see your username in here on the scripts, but it has an expiration date of the 6th of July 2023. So let me go look at your subscription. Are you Aurora Nora, are you Cybernetics? Is that what you're saying? Did you just dox yourself? No, I'm just kidding. Any? Could just be some weird. Yeah, okay. That's weird. Your subscription, your current subscription doesn't expire until August 5th, 2023. Let me just, oh, Krypton. Oh, I see. Interesting. Okay. Yeah, I see that. I do see that the payment went through. Let me just message Ben and ask him to run the bot. Oh, okay. Yeah, Ronora is cybernetics. All right, you guys. Yeah, I didn't catch that at first, Cryptonomics, but then I thought about it and I was like, wait a second, were you just arguing with yourself? Oh, tell me about it. I know, man. Well, okay, so just check your I understand that. Quadrigo is the mainstay, but look at your just pull up the trading journal, and you should be able to calculate your position size. So on all the trading journals, there's a position size calculator right here, right? And actually, Quadrigo, this math is the same math I use for Quadrigo. So just go into your Google Drive, Google Drive access. If you don't know the link, it's in the premium member directory. Roar, you're using some big words. But working with some traders, building a neural network to figure the Granger causality of fiscal flows versus other inputs like energy. That's really awesome. Early results, really vet this out. Fiscal flows dominate everything else. All right, Roar Nora, would you like a job? No, that's fascinating, man. Yeah, I actually just, I'm brushing up my data analysis. I just started this data analysis course. Because I'm on this, again, a big strategy trader. So I want to be able to do some more advanced statistics on my strategies. Help me calculate the probabilities a little bit more, just a little bit more robust, and a little bit more robust than like strategy testers, or typically what you'd see: ROI calculations, ROE calculations, win rate, all of these things. I just wanted to fine tune and make the strategy better. There we go. See, guys, listen, there's no reason to get panicked if you're doing lower time frame trading and you take a trade and price doesn't immediately move in your favor. You know, it's going to happen. It's going to happen to you probably a lot, right? Should be hitting our take profit here pretty soon. It's going to happen to you a lot where you're going to take a trade. Excuse me. You're going to take a trade. Again, this is going to, excuse me. It's going to happen to you more if you diddle in the middle, right? Which means taking a trade at a non-extreme, okay? It's going to happen to you more if you do that. So that is a good habit to try to ameliorate yourself of. Not taking trades in the middle of a range. It will prevent you a lot of headache. If you're looking for if you have a trend following strategy, and it's not a PTP system, most trend following strategies have a low hit rate. Okay, the whole point of Pathways to Profit is taking a trend following strategy, taking the most profitable possible trading style, which is trend following, and because you can generate larger returns than reversal trading. The entire point of Pathways to Profit, the methodologies that I teach, is taking that win rate higher, taking a trend following strategy and increasing the win rate. That is what we do. We do that with the use of filters, and we do this all with technical indicators. Now, it's going to happen to you that you're going to take a position and price is going to move against you. You need to stay in your trade. You need to have an invalidation level where you know you're going to cut your losses. You need to have a take profit level. And it's that simple. One of the two is going to get hit. There is nothing you can do once you've hit that buy or sell button that's going to increase the probability of you having a winning trade. It's just not going to happen, right? I'm reminded, I have a friend who he is a very profitable trader, but he doesn't actually trade himself. He copy trades people. And what he's done over the years is he's just compiled this directory, if you want to call it, this kind of this compilation of all of these traders that he follows. Some public, some private, Telegram, Discord, TradingView, whatever. AOL Instant Messenger. And he simply copies them. And we were talking the other day, and he was telling me about this guy that he copy trades, but the guy that he copy trades is a great trader if he would just follow his initial impulses, right? But what this guy often does is he will close the position out prematurely or even flip directions. And these are all mistakes that I've made, that some of you guys have seen me make. And they're bad mistakes to make. So, you know what? I realized that we don't have the. No, we'll just stay here. Yeah. So 9 times out of 10, if you try to finesse your trade after it's open, you're gonna finesse it right into the toilet. Just telling you guys. Nope, I understand, man. Hopefully, I'm just waiting on a response from Ben, and hopefully we can get that run for you ASAP. It's weird. You know what? Actually, I'll just help you out, man. I don't know why I can just do this for you with Quadrigo. It's not a problem. I got you, dude. Manage access. Boom. Your expiration is now. August 5th. You're good to go, man. Refresh your page. All right, we got about 20 minutes left of the live stream. About 20 minutes left. It's going to be noon for me here. We've gone for about an hour and a half. I'm going to go eat lunch, and then I've got meetings at 1. I've got a meeting at 4, and then I'm going to do some strategy development and work on the website, as well as trade throughout the day. So if you guys have some chart requests, now would be a really good time. If you guys have questions about anything that we do, about crypto, now would be a very good time. Oh, you know what? I kind of realized. Yeah, this one is probably the better one. Ooh. Yeah, so I've got to this one right here. I need to. Oh yeah, I gotta update all that. This is looking rough. Okay. I'll just keep it like this for right now. Again, here's the other thing too. I think that is going to be very helpful for the day traders out there. When you take a position, your position, your trade idea should be generated on the higher time frame. So do you guys recall like what just occurred here? You guys have been watching? We started on the daily, okay? And we have a short-term bearish bias. We talked about the break of 33 up, and the break of 29 down. We talked about the break of 29 down being probably more likely. That's where our head was at. We went down to the 4-hour time frame, saw that we had tested the range lows more, and that we had just come up to a level of resistance. Okay. We went to the hourly, saw that we just had a test of resistance and a turnover in price. Came down to the 30-minute time frame, saw that we had got pretty much a trading signal here. Came down to the 15-minute, saw that we did get a trading signal over here, and that at the time we were pretty much at the exact same price. Came down to the 5-minute, saw that we got this trading signal that hadn't played out yet. And then we went down to the 1-minute time frame, and we said, okay, here's what we're going to do. If price comes up here to the top of the Bollinger Bands, we're going to fade and go short. And if price comes down and breaks, we're going to get short as well. Then what happened is when I looked at our open interest and CVD data, I saw that CVD had been consistently dropping throughout this range. Open interest had dropped on this rally up, meaning a lot of people closed their positions out. So a lot of people sold this rally. They didn't buy it. And then as prices were starting to head down, we saw open interest rising, right? So open interest rising is strength in the direction that price is moving. And then funding rate just exploded. which means longs pay shorts. So you don't want to be holding long positions if you're trying to farm funding. So all of those things occurred. I saw that we were moving down quickly toward that level of support after subsequent lower highs. And I decided to get short, and immediately we got follow through. Now, again, here's the point I'm trying to make. So I used multiple time frames and my own analysis to identify this trade opportunity. And then once it happened, I tried to get off the lower time frames. I don't want to sit here and watch the 1 minute time frame because often what can happen is the volatility of the lower time frames will mess with you, right? You'll start seeing a lot of green candles in the 1 minute time frame, and it looks very convincing because you don't have it to scale and you don't realize that this is less than 1/4% movement, and you just need to stay on the time frame where your signal was generated to better stay in the trade. What song is this currently? This is Zero Tension by Lenser. Zero Tension by Lenser. I will type that into the chat. Alex, hey man, thanks for coming to this stream, brother. Thales. Good old Thals. Can I not just look at Thales USDT? I suppose we'll look at it on BitGet. Is this this data goes back to February 2023? Oh, the previous song. It was Pan O Drama by Lenser. Okay. This goes back to June 2022, which is certainly a lot better. Anyways, yeah, so Thales had a big initial run. And then its valuation went from $2 all the way down to 50 cents, all the way down to 25 cents. And now it's ranged between 25 cents and 87 cents for the better part of a year. So pretty much long, drawn-out sell-off. Of course, this is the bear market. Decent accumulation. We are seeing higher lows and higher highs. Higher lows and higher highs from Thales. I know that you're interested in Thales. Thales is pretty interesting right now. I do want to try and get... is there more data? No, that only goes back to MEXC. MEXC has data. March 2022. This is probably the best data we're going to get, even though there's some wild... I don't really like this chart because the liquidity is so low on MEXC. Let's look at TVL, though. I think Thales... Okay, so TVL is looking very, very good. Almost $12 million. Is that right? Total value? Yeah, it can't just be 12, can it? can't just have $12 million. Can I?
Do you wanna follow? Baby, do you wanna follow?
Total value locked 2.02 million.
Baby, can't
Wow,
you see that? I wanna go.
that's weird.
Wanna know? Do you wanna follow?
Why is the data on when it's supposed to be coming from DeFi Llama and this is saying 12 million? That's very weird. That's very weird. Oh, including TVL, staking, and pool too. Okay, now there we go. Okay. Outside of staking though. But anyways, that's still a good growth of TVL. In fact, they just had an explosion of TVL, which is pretty good, which means there's probably opportunities on this protocol. So this is good to see. It's good to see this growth of TVL and Thales, even taking staking and pool 2 out. Price wise, I mean, price wise, it looks like we have very good support here around 35 cents, and our current ceiling is about it was 87 on the other exchange, about 92. So again, you know, about a 70-cent range. So that's a 3x opportunity at least. Yeah, I would look for, I would just attempt to accumulate as close to demand at 35 cents as possible. And then look to take opportunities closer up to $1. That would be, I mean, that's the move on Thales. Might get some shorter term, like rapid price appreciation. So there may be opportunities for kind of a swing trade in the short term here due to this TVL increase. Yeah, you're welcome, Damien. Yeah, big influx of USD since May. I mean, it peaked on June 11th and it's come down for the last month or so. Nice 2-month rise in TVL and then kind of a drop. But again, only a drop from 2 million down to 1.5 million. So not really significant, especially when we really didn't get any TVL on there until May, is what they're saying. Except for staking, I think. Except for staking. Market capitalization hit its high in February at 1.5 million. That's come down to 900,000. Excuse me, 26.01 million. What? Oh, market cap is over here. USD inflows is over here. I apologize. So we've actually, so even though we've seen a big increase in TVL, we've actually seen a bit of a reduction, but market capitalization is relatively stable. I don't think that this is probably too overvalued. All right, guys, my stomach is going to eat my back if I stay. So we are going to wrap this up. All right, guys, I want to thank you so much for coming out today for another exciting episode of the Breaking Bitcoin Market Update. Of course, this has all been brought to you by KrakenCryptocurrency.com. If you guys have not gotten involved with the community yet, there is a link down in the description to our Discord. It is a bustling hub of activity for those who are interested in increasing their cryptocurrency skills and connecting with other like-minded individuals. So keep the conversation going along after the show is over. Do yourself a favor and join that Discord if you haven't already. Link to my free guide, The 5 Mistakes Holding You Back from Profitable Trading, is in the description. Highly recommend it for anybody in their trading journey, whatever level of experience. I've accumulated the 5 most common mistakes I see in trader strategies and trading styles, and put actionable information in this free little guide to help people get a jump start on fixing those issues. If you'd like to copy trade me, you can do so with the link down in the description over on Fair Desk. You can share in my profits, share in my losses, but it's an exciting journey either way. If you guys have any questions, comments, concerns, sarcastic remarks, death threats, and or hot stock tips, please leave them in the comment section down below. I will do my best to respond to them as I can. Make sure to smash the like button and subscribe if you haven't already, and we will be back on Monday, same time, 12 p.m. on the Eastern Seaboard, 10 a.m. Mountain Standard Time, 11 a.m. in the Midwest. All right. So until then, thank you guys so much for coming out. Hopefully you have a very beautiful rest of your Friday and a fantastic weekend. I'm sure you guys are thirsty for that weekend after a little bit of 4th of July couple there. And we'll see you guys on Monday, guys. Trade safely. And remember, personal responsibility is what pays the bills. Cheers, guys.